Hello, welcome to another video of Possibility Unbox. Today I'm sharing about Parkway Life REIT, which has been growing consistently and defying the odds. It has been rewarding the unit holder well, a total return of 370% in 18 years since its IPO, a CAGR of more than 10%. Look at the two charts, they are all trending upwards year on year. Gross revenue, net property income, investment property, as well as DPU and NAV per share. For 14 years, gross revenue has grown 141%, investment property 110%. Their annual growth has been very consistent as seen from the chart. Very worth mentioning, they have been growing without equity fundraising. The number of units has remained relatively unchanged. This allowed DPU and NAV to grow in lockstep with the overall performance. This is definitely not a period of peace and prosperity. Many things happened. The great financial crisis, Japan earthquake, COVID-19, rising interest rate and yen weakening. In this video, I'll be examining their long-term and short-term performance in various dimensions. So let's dive in. A quick reminder, this video is meant for educational and entertaining purposes. Nothing in this video is intended to be financial advice. Please do your own research and consult a professional before making any investment decision. First, an intro about Parkway Life REIT. It IPO in 2007, market cap 2.1 B, one of Asia's largest listed healthcare REITs, 61 properties in total, 3 hospitals in Singapore, 1 specialist clinic in Malaysia, 57 nursing homes in Japan. They have been acquiring the Japan portfolio by acquiring nursing homes. However, since 2020, Japanese yen has fallen by 30%. Zooming into the quarterly results for the period, the decline in gross revenue has been quite marginal compared to the yen weakening. A few things they are doing: acquisition to increase revenue, adopting a natural hedge strategy to match assets and liability in yen, hedging its interest rate exposure and net income hedges, lease agreement with downside protection and up-only rental review provision for most of the nursing home. So far, they have been able to cushion the impact well. Besides the weakening yen, another challenge they are facing is rising interest rate. I use the 10-year Singapore government bond yield as the benchmark. The red box shows 2013 to 2022 to compare to Parkway Life on the right. I extend the chart to zoom into the cost of debt on a quarterly basis from 2019 onwards. Can you spot the differences? First, the bond yield was ranging from 2013 to 2019. Parkway Life cost of debt was declining. In 2021, the rate shot up quickly and went to 2008 levels by September last year. Parkway Life rates was at a low, went up only in 2020, stabilizing at 2016 levels. Its cost of debt is at 1.19% as of 2023, much lower than other REITs. Gearing ratio is at 35% within optimal range. Interest coverage is declining but still one of the highest among the S-REITs. The Singapore portfolio has been contributing more than 50% of the total gross revenue. It jumped to almost 70% in recent 2 quarters. Zooming into the quarterly result, there's a sharp increase in the gross revenue due to higher rent from its new master lease agreement. Its Singapore portfolio remains an important contributor to the REIT. The master lessee of the Singapore hospital is Parkway Hospital Singapore. It is a wholly owned subsidiary of IHH, which has 4 hospitals in Singapore. The one that is not in the REITs is Mount E Novena. IHH also provides primary care clinics and other ancillary care services. It owns more than 35% of the REITs. Singapore as a business unit contributes about 30% of IHH group revenue and almost 40% of its EBITDA. In 2022, the REIT's Singapore gross revenue is about 4.8% of IHH Singapore revenue. 3 of its 10 properties by net book value are Singapore hospital. Altogether, it shows the importance of the Singapore hospital to IHH's overall businesses. So what is the investment thesis for Parkway Life REIT? Share price is now trading around $3.65, dividend yield 4%, NAV $2.33. How investor value Parkway Life will depend on a few things: interest rate direction, yen direction, and their plan to sustain DPU. Let's look at the monthly chart since its IPO in August 2007. It is currently at support around $3.70. Using FIBO from its all-time low to its all-time high, FIBO line do accentuates around major support and resistance area. The next support is $3.43. MACD is at a low and turning up. Monthly RSI is at a low too. Let's sum up what they have been doing so far. Consistently growing its gross revenue and DPI, able to raise DPU consistently, able to maintain their gearing and interest cover while growing, not asking unit holder for money since listing. Besides the great financial crisis, Japan earthquake, and COVID-19, they have to deal with the yen weakening and rising interest rate. As I research the REITs for this video, I'm constantly impressed. It's not about luck. They have shown resilience, prudence, and focus. High quality assets with a high quality management that has proven to be a consistent grower. Many of the management team members have worked in Parkway Life REIT for more than 10 years. The CEO, CFO, and CIO has been there since 2008-2009. The CEO stake has been increasing over the year. It's now worth more than $3 million. A long-tenured team can give them several advantages. 1. A deep understanding of the industry. 2. More committed to the long term. 3. Strong teamwork and a good organizational culture. What to look out for? For the Singapore portfolio, there's a new master lease agreement from August 2022. There's a guaranteed increase from now to 2025. From 2026, the annual rent formula will be used, and the initial rent in the formula is 97.2 million. For reference, its gross revenue for Singapore in 2022 was 82 million. I strongly advise investors who are interested in this REIT to study the master lease agreement and its long-term impact to rent income. There's a capex works of 150 million to upgrade the hospital. They have been given the right of first refusal for Mount E Novena Hospital. They have been working on the third market beyond Singapore and Japan. So far, no mention where this third market is and when they will execute the plan. The two macro factors that we have to continue to take note of: interest rate directions, yen versus Singapore dollar. This is all I have today. I hope you find it useful. Do remember to like, subscribe, and share your perspective. If you like Parkway Life REITs, you may want to watch a dividend growth stock I covered on my first video. Thank you.